the future of Bitcoin is probably likely now to be characterized more by lower volatility, passive bids by wealth advisors into ETFs. Like, that's a good thing. I mean, that's the reason I think you've seen the whales, some whales, not all, but some OG whales distributing here is not because they're bearish on Bitcoin's future, but simply because they can. The market is so much more liquid and bigger than it has been in the past. Perhaps the era of 10x, 100x, 1000x is over for Bitcoin, and that it's entering a new maturity phase where it looks a lot more like a stable but growing asset. A lot to compete with this year, and Bitcoin just didn't deliver the returns necessary to keep it in the front of every investor's minds. I think that can change, and we're obviously long. I haven't put out my year-end 26 call yet. I'm not quite prepared to do that, but I think suffice to say it will be higher.
Welcome back to the Blockspace podcast. I've got Alex Thorn, head of research at Galaxy Digital. Alex, welcome to the show.
Thanks for having me, Charlie. Big fan of the show and great to be here.
Yeah. I've had a number of the Galaxy research folks. I had Will, I had Zach, and I'm completing my Infinity Gauntlet with you here. And I have half a mind to try to talk about stablecoins because, there's not a lot of Bitcoiners, I think, who have like a sophisticated understanding of stablecoins, myself included. And so I want to have like a Bitcoiner to Bitcoiner chat about sales. But before that, as of right now on Monday, this pod comes out Wednesday. As of right now, the government is still shut down. And I think maybe this could be an interesting place to kick it off. How much is the government shutdown affecting Bitcoin price? And now that we may have a light at the end of the tunnel, what's your take?
I don't think it's affected it that much. I think the October 10th leverage wipeout, as I've been calling it, definitely affected it more. I think competition this year from AI, from stablecoins, from nuclear, from general high performance compute and data center investments and gold has been more of a headwind for Bitcoin than even recently than the shutdown. I do wonder, though, it does appear that the Senate, as we record on November 10th here on Monday, that the Senate is about to vote or may have just voted to actually advance their package to open the government, but it does have to go back to the House because they didn't actually vote on the clean version the House already passed. Assuming it does get passed by the House and sent to the president and signed and the shutdown ends, I do wonder if perhaps while the shutdown might not have been uniquely bearish for Bitcoin and crypto, perhaps the reopen could be bullish. Since we feel kind of, I don't know, as we right on Monday here, the cryptos and the stocks and the gold are all rallying, presumably mostly on optimism around the reopening.
Yeah.
It feels like crypto and Bitcoin's at pretty low, like or nearly bottom sentiment. The fear and greed index and all that stuff's low. So presumably any big positive government catalyst could help and could be a tailwind.
And you guys actually recently, Galaxy Research, revised their y'all's end of year price prediction from, I believe, 180K Bitcoin to like $120,000 Bitcoin. What's behind that? I know you explained it, but kind of what's behind that? And also 120K Bitcoin, that's still great. That's still doing great from where we are today. So what's behind it?
That's so nice of you to say, because people have been calling me a dirty bear. They said it will.
They don't know who you are. You've been in this game forever.
If you're not going to keep 185 and you're going to say 120, why don't you just sell all your Bitcoin? Some people said. And I was like, first of all, I'm not going to sell my Bitcoin. I'm very long Bitcoin. And second of all, that's still a 20% rise in 6 weeks. This is through the end of the year. In fact, if anything, and I told this to our clients and counterparties when I sent them that note last week, I should have revised it lower sooner. I think that, like I said, that October 10th wipeout really sort of catalyzed the need to update. But also keep in mind that 185 year-end 2025 call, I made that on December 31st, 2024. So a month and a half after the president won his reelection. This was a period between, November 5th and January 20th last year, when the number one trade in the world was long Bitcoin. Okay. Like across every asset class. And that was because everybody knew that the president was going to have a very pro crypto agenda, but there were no specifics yet. We didn't even have the nominees for things like the SEC yet. Right. So we just knew there was a giant pile of positive catalysts that were coming, and we didn't know what they were. And it was all hope and no substance. And everyone just knew they were meant to be long. And so they were. And that was a very bullish time. A lot of people put out targets. I posted at the time in January of this year, but shortly thereafter, I was in the middle to low range of very public Bitcoiners targets at 185. People were calling for 200, 250. That 185 was a call I made over about a year ago after the president's reelection. I probably should have lowered it sooner, but I still haven't seen any of those other people really lower there. So I feel pretty safe. There was a range of factors. I said before, like just narrative speculation, a narrative sort of primacy and prioritization in the markets, the broad risk markets. And Bitcoin is a global macro asset. It's traded by people who trade other asset classes in size now. It's not just hobbyists. It's not early adopting speculators, right? So it matters what big investors are thinking about. And while it was the number one trade at one point with, MicroStrategy, remember last year, that was like the biggest story in all of Wall Street is what Michael Saylor did last year. And long Bitcoin was the trade everyone was meant to be in, and it pushed us up to all-time highs and again and again. But over this year, that's just changed, right? Gold itself is, up 30% on the year. Hold on, let me just pull it here. It's up. Gold is up 57% as we write year to date, whereas Bitcoin's up a meager 12, right? S&P's up 21. Sorry, S&P is up 15. Nasdaq's up 17. Sorry, I got it's a big grid I got to look at. I'm trying to track it over. But again, S&P and Nasdaq performing better as we speak year to date. Gold way better, right? And so like Mag 7, AI hype and investment, data centers, HPC, even some nuclear stocks, a bunch of quantum stocks, gold, one of the, you could be long one of the most conservative assets in the world and have made 57% this year. Bitcoin is at best and crypto, maybe 7th to 10th in the list of trades that the world is sort of looking at this year. And that sort of narrative slip, by not reaching continuous, crazy moon new highs this year, it just sort of lost some attention. And I think that's largely, I would say that's the biggest headwind. I think part of the reason it didn't is also because of significant whale selling, huge distribution. Bullish, though, because it was into large absorption. Other factors, too. And frankly, stablecoin investment, if you look at the venture space in crypto, it's been dominated this year by fintech type investments, payments, cross-border payments, stablecoin L1s, right? Very small investment in Bitcoin startups, although Bitcoin's always lagged on the VC side. So a lot to compete with this year, and Bitcoin just didn't deliver the returns necessary to keep it in the front of every investor's minds. I think that can change and will change. We're obviously long, medium and long term, and I haven't put out my year-end 26 call yet. I'm not quite prepared to do that, but I think suffice to say it will be higher.
I'm of similar mind. I'll just double tap on this. We saw hotter investments, AI related, everything downstream of that, gold, some macro instability, although it just depends on who you talk to. What does it take for Bitcoin to regain the belle of the ball, the darling trade? What do you think has to happen for it to get back up to one of the more desirable top 2 or 3 trades?
I think you need the headlines of nation state, formulates or launches strategic Bitcoin reserve. I think you need giant pension. We're at such a high level now that 3 of the 4 world's biggest custody banks have launched or have announced that they're launching Bitcoin custody, right? That used to, if you said that in 2018, we'd probably rip 20 or 30%, right? Now, the bar is so high because Bitcoin's such a big, established, more mature asset that, for big shocking catalysts, they have to be even bigger. That being, and I think you'll get those, right? It's unclear when, not just generally, but even say from the U.S. Treasury. Presumably, we are still yet to find out something about the SBR. They are working on it. I don't think you're gonna. I said last year that they would hold but not buy. That was my prediction for 25. That's been right so far. But they also haven't really come out and said how much they hold, and I know why. It's very actually, if you just chat GPT, explain civil asset forfeiture, federal statutes, really not that clear that the government can even legally reconnoiter the Bitcoin into its own SBR. But so there's legal issues. I think something like that though, could create a step function where Bitcoin really takes the limelight and is the number one again. But I would say the future of Bitcoin is probably likely now to be characterized more by lower volatility, passive bids by wealth advisors into ETFs. that's a good thing. I mean, that's the reason I think you've seen the whales, some whales, not all, but some OG whales distributing here is not because they're bearish on Bitcoin's future, but simply because they can. The market is so much more liquid and bigger than it has been in the past. And a bigger liquid market, that means you can enter with more, when volatility is lower, you can take a bigger position size. That's when you might start to see like pensions and endowments with really big allocations. So it might not be, I mean, I said, this might be why people called me a dirty bear. I said, perhaps the era of 10x, 100x, 1000x is over for Bitcoin, and that it's entering a new maturity phase where it looks a lot more like a stable but growing asset. So, and I think, you know, and that's just kind of what winning looks like. I don't know what people expected. It's a lot harder to double a $2 trillion asset than a $200 billion asset. It's a lot harder. Yeah. It takes a lot more capital.
A lot of people forget. Yeah. I mean, roll the clock back just 3 years. A year and a day ago, FTX declared bankruptcy, and it was like a sentiment bottom. You were in the middle of this at the time. In fact, yesterday, you tweeted about it. Some great reflection, some great reflective thoughts. Like, people forget how dramatically the entire narrative can change and evolve in just a matter of 3 years. So yeah, I guess maybe the last question on this is like, you mentioned this era of comparative boringness, if you will, begins to behave more like a normal good for well-performing asset. Is this the institutional bid? Like, you know, what would invalidate that thesis? And yeah, what do you think in 3 to 5 years from now?
Oh man, I mean, I it's hard to know, and I don't like to perform like, you know, model based price predictions. I think whether it's like discounted cash flow or something else. I mean, partly the reason is no one, from a financial modeling standpoint, nobody still agrees upon what Bitcoin actually is, and nor do I. So, for example, some people say you can do a DCF model on anything. I totally disagree with that. I don't think you can. You end up with absurd ranges like, you know, $3,000 to $3,000 or like, you know, 100K to 5 million. And I just don't see those as useful. I do think it will become used more broadly as a portfolio hedging asset, a debasement hedge, a risk off store of value asset. And in that sense, I do like comparing it to gold. I think Bitcoin has peaked at like 11 or 12% of gold's market cap during the last bull market. I would like to see that get to 20 or 30 in the next 5 years or so. I think it's possible. You know, and I should say, like, I mean, Bitcoin is highly scarce. Any meaningful uptick in adoption could absolutely create upside volatility that doesn't look like the slow mature grind I'm talking about. I'm just sort of saying I think that's my base case, and it surely can be characterized by rips up and dumps down. Like, it's not going to be, even right now. I mean, we've been down what, 20+% from the all-time high. That's a meaningful, in fact, that's bear market territory when you think about like the way financial analysts talk about traditional equities. So, I mean, I think it will still be volatile, but I think, you know, it's reasonable to think we're in the 200-300K range in 5 years. I think just back of the napkin. And I think that'll be characterized just by much more wide ownership. Think about this. The supply, the old supply that's been distributing to new entrants is fixed. There's a finite amount of old supply overhang, but there's theoretically an unlimited demand upside or amount of demand, right? And so this is good. I mean, where did you want people to sell? You want them to create a headwind at 150? I mean, it was going to happen, right? Yeah. Like, it's better to clear some of this out now. I think the fact that we're literally doing the meme of Bitcoin dumps to 100,000. We're literally doing the meme.
CZ was tweeting about, if you go back, there's a tweet for that CZ had from like 2020. It was like, sometime in the future, Bitcoin crashes to 100K and everyone's in shambles. Yeah, we're doing it.
That's kind of what's happened. We crashed to 100. The fear and greed index was like the lowest it's ever been, as if we were in like a devastating bear market, right? So now part of that is just because like so much absorption has happened. I think James Check has done a really good job with this data this year. But one of the things he's been saying and tracking is that the average network cost basis, like the realized price basically, is 95, 96K. So like more than half the network theoretically is underwater below 96. And that just says, wow, you know, one, that should be a line for the bulls to hold. And I would say near term, if we go below there, I start to get concerned about the status of this bull market. still to me, this looks like softness but well available for a continuation of this bull market at these levels. Below there, it gets a little dicey. But the other positive way to look at that is there's an enormous amount of demand to own Bitcoin and buy Bitcoin over 96K. They're like an enormous amount. Most of the Bitcoins on the network have moved on chain at prices that were higher than that. So that, I think that's really good acceptance of Bitcoin as a big, much more valuable asset. And that's, an important step onto it being used as a debasement hedge by, the types of entities that really need debasement at scale, right? I mean, individuals need debasement protection, but so do like multi-$100 billion investment firms. And I think, it'll play a role there. This is just another bump along the ride. We'll probably be on here in 2-3 years, Charlie, talking about the panic that is ensuing because Bitcoin's crashed to 200K, right? Yeah. It feels like that. We've been around long enough to know that's possible.
Yeah, we're going to keep having this conversation forever. It's going to be the same conversation, higher prices every year. Okay. So, I want to switch to talk about stablecoins. You are a longtime Bitcoiner. I think a lot of people think, oh, well, a Bitcoiner, they don't pay attention to anything that happens outside of Bitcoin, and they hate other cryptocurrencies and they hate all these things. But I just think that's like an ostrich with their head under the sand. The world is dynamic, and a lot of these things have real value and are really changing the world around us. Stablecoins may. So I want to have a conversation with you about stablecoins. I think back 10 years ago, and the cypherpunks who kind of came up and codified a lot of the early Bitcoin language, I don't see them talking about digital dollars. I didn't see them talking about stablecoins. What's your thought about this? Why are stablecoins arguably one of the killer apps of our ecosystem that some of the progenitors of the Bitcoin world may not have predicted?
I mean, the Bitcoin white paper is peer-to-peer electronic cash system. And I happen to have always, maybe it's me projecting, you've always got to project your views onto Bitcoin. Everyone does. I've happened to believe that the cash there primarily means bearer asset, not so much literally day-to-day payment vehicle. However, in the white paper, Satoshi does say payments on the internet. He does appear to be talking about day-to-day payments. And certainly there's been a rift in Bitcoin about whether it is primarily best thought of as a monetary and store of value asset or as a medium of exchange and payments asset. That's been a debate that has characterized Bitcoin's history for years, and it continues to, frankly. This week, Square is turning on Bitcoin payments at all of their terminals. I think it's the biggest point of sale vendor in the United States. You've got the Lightning Network, which obviously is focused around the medium of exchange use case, but then you've got the ETFs and the digital gold thesis, which have taken off. I think there's clear product market fit for Bitcoin there, but not quite product market fit at scale for payments, right? And, in the face of that, there was sort of narrative room for someone to build something that competed with that idea. And then separately, Bitcoin is very volatile historically, right? Dollars are volatile very slowly to the downside only, right? But slow enough that you don't quite notice and you're able to spend them. And that's sort of where that 2% Fed inflation target comes from. They know they need inflation long term. That's part of the strategy of fiat money, but it needs to be small enough that you don't quite notice. And so that you're willing to spend it, right? Because in countries where they have hyperinflation and debases really quickly, people just dump it as soon as they can, right? And eventually end up weaving baskets out of it, like in Venezuela. If the money appreciates, people don't spend as much. That's their fiat theory. And so they want something that's just slow enough. Bitcoin's been too volatile to the upside. Look at Laszlo Hayek. I always forget how to say his last name.
Friedrich Hayek. Yeah.
No, Laszlo, the Bitcoin pizza guy.
Laszlo Hayek. Yeah. Also, the GPU guy, the GPU pizza guy. Yeah.
Yeah, I think he's probably fine because he was mining a lot of Bitcoin at the time. But do we think he regrets his 10,000 BTC pizza purchase? Probably, right?
He says he doesn't bother himself too much. He doesn't concern himself too much.
Well, he better not, or he wouldn't sleep. Yeah. Right? He's got to figure out how not to bother himself. It's a lot of money. So, look, I think the emergence of a dollar asset that uses a similar technology to Bitcoin is sort of inevitable. And before stables were widely adopted in crypto, people used to do this trade on BitMEX. BitMEX was crypto only, no KYC, no stable coins. So to go flat, you would basically long the underlying and short the perp. That would be you going flat when you didn't want to be in the market, or vice versa. There's been a demand for a stable asset in the crypto markets forever. And in some ways, the debanking of Bitfinex and some of the crypto firms in like 17 and 18 is what really led to the rise of stable coins. So it's ironic as well. But I think that a digital dollar that is on a blockchain is a really good innovation for a lot of use cases. It's not immutable, okay? Like they can freeze and seize, but they can do that today with bank dollars as well. There is I would say a self-sovereign upgrade here, which is that you can self-custody the digital dollar. Like it's not just holding a balance on your, Venmo or Cash App. You can actually hold the dollar tokens and have only a liability to the issuer and not to a third-party platform or anything like that. And whether, Bitcoiners like it or not, we live in a dollar economy, and we still do. And I don't think Bitcoin is very close to displacing that. So stables are a meaningful upgrade for payments. I think if you look at the financial and payments, like ecosystem or like technology stack, you'll find that it is a intertwining, like absolute garbled mess of systems just stacked on top of each other. You practically need an archaeological degree in order to untangle how payments and by the way, stocks too, how they work. And stablecoins are very disruptive for that, to the benefit of the consumer and businesses that send and receive dollar payments. So there's even more I could say. I think there's also a big geopolitical angle here as well. But yeah, it's just an obvious upgrade. I'm like Bitcoiners can, there's a few, like the guy that took his family around the world and lives in a van. Like there are notable people who've lived on a Bitcoin standard, but still that's very difficult today. And most people, even Bitcoin maxis you might think that they don't, they still use dollars, right? And so why not have a better dollar upgrade in the interim, even if you believe that Bitcoin would displace the dollar for medium of exchange?
Hey, Will here with Blockspace Media. Did you know that we have individual feeds for all our shows? If you're watching the Mining Pod, Bitcoin Season 2, or the Court Show, be sure to check out the individual feeds. You can find them on your podcast player of choice, whether that be Spotify, Apple, YouTube, etc. Just type in Blockspace Media and you'll find all our shows pop up, or just type in the individual show name like the Mining Pod or Bitcoin Season 2. Be sure to hit that subscribe and give us a 5-star rating so we can continue to bring you the best content in Bitcoin.
You brought up like some of the genesis of the stablecoin era ties back to Bitfinex, out of which came Tether, who is like the giant. But now there's been a stablecoin explosion. Obviously, a lot of a lot of productive like framework being made at the U.S. government level, and Genius and Clarity Acts coming out. Maybe more stablecoin bills. We'll see. But it's interesting because we've seen almost like now kind of a stablecoin pecking order emerge, where we have USDT be the clear king and winner, but Circle also continue to have a good IPO. What's your take on the stablecoin pecking order? USDT now to be the US approved USAT. I don't know, like what does the future look like for all these different stablecoin plays going forwards?
Yeah, I mean, Tether, obviously the global juggernaut. Circle, I would say the biggest US based issuer. And you mentioned USAT, which is Tether's announced, I think, a subsidiary, but will be their US offered version of USDT. The Genius Act requires either compliance with a U.S. federal framework, which has basic stuff like collateral type, KYC on the create redeem, bankruptcy remoteness, a variety of general good safety measures, I would argue that, and then it allows for a state pathway in the U.S. So if you're below 10 billion in issuance, you can issue through a state license rather than get the federal license. But that's only if the Treasury Secretary says that the state license is substantially similar to the federal license. But, it might be cheaper, for example, for a startup to go through a state, or you can be issuing in a foreign jurisdiction that the Treasury Secretary has determined has reciprocity with. So for example, you might see, right, there are pretty advanced frameworks in Europe, in Hong Kong, in parts of the Middle East that the Treasury Secretary could say these are substantially similar and, that's okay. Then you don't need a US one. You can use that one. I don't know, but I don't think El Salvador's will be determined for that. I mean, I can't know. It's possible. That's where Tether is headquartered, right? So theoretically, though, they could pass one in El Salvador. If the Treasury Secretary says, you know what, that one meets our minimum standard, then maybe they don't need USAT. And everyone's been wondering what Tether was going to do here because definitively offshore. Everyone knows that, right? But you kind of have to be onshore. I mean, the foreign reciprocity, like that really remains to be seen. I mean, this is one of the questions Treasury is asking for comments on, like how should the Treasury Secretary weigh the reciprocity? And so we don't really know, but we do know that if you have a US license from the feds, you could do it, right? So then we're like, okay, well, is Tether going to come onshore? Or might they stay offshore entirely and say, we don't need the US, or might they launch the subsidiary? And it looks like it's the last one. They are launching it. Stepping back to your question, Charlie, like what does in a more mature state that list of that pecking order, as you said, look like? I mean, you're going to see banks and consortia of banks and financial companies issue stablecoins, almost certainly. So the question is, can one of them displace the Tethers and Circles? By the way, you can be a stable value asset, we think, according to the Genius Act, although, again, a lot of this has to be determined and rule made by the Treasury. You can be a stable value asset that doesn't market yourself as a stable coin and can't be used for interbank payments without registering. So you could imagine there might be some, take DAI, right? MakerDAO's stable coin. It can't comply with Genius. Its collateral is not 92-day treasuries or less or repos. It has crypto's collateral. As far as unless plain read of the Genius Act makes that impossible, it doesn't mean it doesn't mean it will be illegal in the United States. It just means it can't say it's a stable coin and banks can't use it. But we envision a world where basically anytime you send money anywhere, dollars, it is stable coins, whether in the front or the back end, right? Because it is just genuinely significantly better than sending a wire and watching it disappear for hours and not knowing if it's landed, and the ACH, they're just not good. So we think it'll be used by everybody. And so the question is like, will that be banks? Will it be Circle? Will it be Tether? Well, no one quite knows. I would not count out the banks, anger here. And we're one of the only countries in the world where banks are big players in the payments system. I don't think that's right. I think banks are antiquated in many ways, right? Like I think they're going to try to play here, but I think you're going to see a lot of upstart stuff. But one of the other interesting things to look at is these stablecoin issuers' primary business model is collecting the interest on the collateral, right? And there are debates about whether or not the Genius Act allows them to pass any of that yield back to their token holders. Most think that they can't give them directly to token holders, but theoretically, like you could, an issuer could give some marketing spend to an intermediary and then they could reward it. But think about this, in a falling rates environment, that revenue is going to dry up. So you're starting to see stablecoin issuers launch their own blockchains because they want to monetize at the transaction level the same way that the payments companies like Visa and MasterCard do. So you've got Arc from Circle, you've got Tempo. You've got Plasma, which is, like Tether affiliated or something. So that might also be an interesting thing to watch in terms of the pecking order. Like, how do these things monetize? Unless you're at scale, it's not a particularly good business, stablecoins, as far as I can tell, at least in the current iteration. So we'll see some business model evolution as well. Yeah,
it seems like this is like the place to watch. Like as this market emerges and matures, there will be the pecking order. We'll have to watch. Maybe we could make like a little like ranking chart. Be like, here's the unofficial pecking order if you're in the US. So,
and you don't want if they're fungible, and they should be fungible, even though this setup is not in a CBDC construct, it would be one issuer, your central bank. And so of course it would be fungible. One of the criticisms, of people that are pro CBDC, but anti private stablecoins is like, well, we're going to have 50 stablecoins. Like, why? It's like free banking, wildcat banking era. But the reality is this sets a very high bar in federal standards. So there's really no reason why you wouldn't accept Circle, Tether versus USDC if they were both regulated under this framework. Nonetheless, why would a bank, if its customers are depositing stable coins at it, surely they'd want it to be their own stable, right? Because then at least they also collect the underlying interest. So it's not clear, frankly, and I've worked a lot on this. And the fact that I don't have a strong view is actually kind of frightening to me. It's not clear if we're going to have 2 or 3 winners or like 50 or 100 competitors that play. It's not quite clear yet. So the banks are throwing up a big stink on this, I can tell you.
It feels like, what's funny is this feels a lot like the L1, like the blockchain L1 trade from like the late 2010s, where it's like, are we going to have one smart contract blockchain, or are we going to have all these disruptions? It seems we were like entering that era for stablecoins, where it's kind of up in the air. We'll see. Couple more questions about stablecoins. They got to be backed by something. U.S. Treasuries are a popular one, but like there's Bitcoin-backed stablecoins. Tether's diversifying into like, business venture. And like, what do you see the future of that? And I guess like, is a Bitcoin-backed stablecoin ever competitive? Is this at all like a feasible idea at scale? It's volatile. I don't know. What are your thoughts?
I like it. I think it can work. It wouldn't be legal to be a stable coin. Actually, what I should say is it wouldn't be a legal permitted payment stable coin in the United States. That is the legal language in the Genius Act. Those have to be backed by cash-like instruments and short-term U.S. debt. But that, like I said before, it doesn't mean it would be illegal, right? And you could offer, I think we're pretty sure, although again, this is up in the air still from the lack of Treasury rulemaking yet, but they're asking about this. I'm of the view that, digital asset service providers, and using another legal term from the bill, should be allowed to offer for conversion or sale these types of other stable assets, whether it's a Bitcoin-backed stable, whether it's something like Athena, which uses the basis trade, like that should be allowed. It just can't be a stable coin, right? Like why? So, I like it. I also frankly still like, collateralized debt position stables like DAI as a design area as well. So I think all of this is mostly on the table. The only one type that is likely to be outright illegal are algorithmic stable coins that are backed by that are collateralized by an endogenous asset, endogenous collateral, meaning
the
like
Terra Luna concept.
Yeah, Terra as the coin with Luna, or like if there was if FTX had released one and backed it with FTT, right? Like where the issuer is backing it with its own. Now that's not even actually banned in the Genius Act, but they're required to do a study about it. We obviously think those are inherently dangerous, but there are many other forms that can work, right? It's just a matter of good management, proper disclosure. That's one thing the Genius Act requires. Like you will get fined if you market something that doesn't meet those requirements as a stable coin to U.S. users. So I think there's pretty strict controls around like the downside risk of other non treasury and cash backed stable coins. But I'm very open to the experimentation in crypto for these types of things. Stable coins, just to drive the point home, they do not solve the problem with the US dollar, which is that it's down 99% over its life, and like any coin that you might hold forever, like when you think being down 99% is as far as it can go, like I'm sorry to tell you, can always go down another 99%. And so it solves a payment thing and a dollar distribution problem. It extends the reach of the US dollar. For all I know, the Genius Act will have extended the dominance of the dollar as the global reserve currency by 30 more years or something, some number, right? Like it's a very important geopolitical thing that has real world positive impact for individuals and businesses. It doesn't solve or impact at all the Federal Reserve's debasement of the US dollar.
That was literally my like kind of capstone question was like, stable coins, do they reinforce the system? Are we actually disrupting the system? Did we get co-opted? This is stepping back as like the revolutionary, putting on my cypherpunk anarchist hat a bit here. Like, are we losing the plot, or do we just have to adapt to a new, just the reality of the market forces?
I mean, the launch of stablecoins absolutely lowers the likelihood or pushes farther out the adoption of, say, Bitcoin as a widespread medium of exchange. It absolutely does. But as far as the bull case for BTC, like I really don't think a lot of people have been buying BTC under the premise that it would be used as a medium of exchange. So I don't think it materially dents the bull case for BTC in any sort of meaningful way. Like, I don't think most of the buyers that brought us from 20K to 100K did so because they thought it would be used to buy coffee. I don't believe that. So and look, broadly, it's not just with stables, but, talking about Bitcoin being owned by pensions and endowments and in ETF vehicles, like, has that lost the plot? I mean, I am a big supporter of owning Bitcoin in self-custody cold storage, but, this is kind of what winning looks like. I don't know. People, did they think that, pensions are going to like have treasures and cold cards in a safe? Like, that's simply not how they operate. In some cases, they're prohibited by law from operating like that. They need to use qualified custody. It's just simply not a realistic expectation. I think we can do things to reinforce some of the cypherpunk values that are really positive, like self-sovereignty or privacy or permissionless payments and immutability, by sort of, Trojan horsing this thing in the front door, right? And that's kind of what's going to happen, I think. You're not going to get all of the features that the most pure Bitcoin maximalists wanted adopted by governments or like mainstreamed in the population, but you're going to get some. And I think in general, not just for Bitcoin or stables, or another one I look a lot at is tokenized stocks, which is probably a topic for another day. But like, where there is a clear push and pull between decentralization and centralization. The line exists somewhere in 2015 or 2008, 2009. It's going to be meaningfully further on the decentralization side for all of these. The question is where, right? Where on that spectrum will it sort of find an equilibrium and a stasis? And that question is live for Bitcoin. It's live for stablecoins. It's live for other things. And I think, the Bitcoin industry and the crypto industry has meaningfully pulled it towards decentralization. You're getting pushback. Bank Policy Institute continues to write angry letters about tokenized stocks, about stablecoins, right? That represents the world's biggest banks. They're going to resist, and they have been resisting, but they're also, it's not even just about centralization versus decentralization. It's about incumbent versus challenger and innovation, the innovator's dilemma, that they would always resist. It wouldn't matter if it was controversial or just merely innovative. And I think we've done a really good job introducing very disruptive technology into money, into payments, into equities, into all of these areas where public blockchains are making an impact. And I think it's going to end. I don't know if it'll ever end, but it will find an equilibrium in a far closer to the decentralization side of that spectrum than ever before over time.
Yeah, we are definitely still pissing off some of the right people. So that's always a good sign. So I guess wrapping this up, the Bitcoin season 2 narrative that this podcast gets its genesis from. Bitcoin season 2, this ebullience, this optimism among new types of assets, new things happening on Bitcoin, ordinals, runes. There's a layer 2 explosion a year and a half ago. A lot of that momentum is down. The Bitcoin season 2 narrative feels very stale right now. What are your thoughts about this? Was that a one-off event, or do we just kind of wait for things to pick back up again? Where's your head at on this?
I think it had the momentum for Bitcoin season 2 has stalled. I think there's no doubt about that. Obviously, if you look at ordinals and runes and these layer 1 assets, they're down hugely in terms of both narrative, attention, adoption, prices, right? The layer 2 stuff, I don't think has fully materialized yet, but it's very interesting. I'm waiting for, things like Botanix and Citrea and Alpin to launch fully. I think maybe Botanix has launched.
Botanix is live, but it's slow. It's
early.
I think they launched this summer. I'm a disclosure. I'm an investor, but so. Yeah.
Yes, and Disclosure Galaxy is a Citrea investor as well. Yeah. So, but I don't think that's fully played out yet. But one interesting thing, which is not the topic for this show, but they've become embroiled in this arbitrary data and filters debate that is new. It's always been around, but so
it's as old as time. But this one's particularly heated.
Citrea in particular has found itself embroiled because they had a white paper where they said perhaps they would use those fake outputs the way like Stamps does. Even though I don't think they do or plan to, they did say they looked at it. And then what Antoine Poisset and other Bitcoin developers pointed to that as one example of the risk of not expanding the op return data carrier size field. So now they're sort of directly embroiled. It's not clear whether the filterers are mad about illegal content or merely degenerate content, or if they're mad about ZKPs. I mean, from my perspective, layer 2's posting proofs on the blockchain to enable other monetary off-chain transactions is effectively the scaling roadmap that's been described and adopted by Bitcoin for over a decade. So but they're concerned because, Citrea or Botanix or Alpin might also have monkey JPEGs on them effectively. I think that's where it comes from. So it's this really interesting push and pull, because the ordinals brought this Bitcoin season 2 really to the forefront, but it also will end up being a headwind where, whereas if so I don't know where that lands. I don't think the story is really fully played out on the L2s yet, because they really haven't meaningfully launched. Shout out to Willem and the team at Botanix. They did launch, but it's early, right? So I don't know. And honestly, I mean, if you had BIP 444 or whatever, it's not the real BIP name, obviously, but if you had this new proposal enacted, they'd be kind of bricked potentially. I mean, of course, they'd find a way to post, and that's sort of the ironic problem with the filtering. But in any case, so even at that consensus level, I highly doubt it. But if we were to see meaningful restrictions put in place on arbitrary data, then that would also impact the story for L2s, and that hasn't fully played out yet either. So still early. I still think it's very interesting when people use Bitcoin in strange new ways. So I still like to see that, and look, it's not impeding at all in the monetary use of Bitcoin. Let's be real. Fees are nothing. So that's the other irony, is that there's even a debate about whether or not these L2s would be legitimate, a legitimate use of Blockspace, when Blockspace is basically free today. Cheaper than it's been in a long time. Yeah.
I think the reason you and I we look at it so closely is because we like to analyze. We like to look at this stuff. If you're in the research business, you're trying to pump your research bags. The more interesting stuff that happens on chain, the
it
more
is actually true
stuff you guys can do.
I mean, if this is just a send, receive, hold network only, let's say no covenants, no timestamps, not even multi-sig, that's pretty boring from a data and research standpoint. And I mean, we put out a case where we thought that the ordinal market could become really big. And now we put that out. It did almost get to our target, by the way, before it pulled back. But more than anything, I just think it's interesting what people are using it for. And I think there's more interesting stuff ahead. The top is not in on Bitcoin being used for interesting stuff.
The top is not in for Bitcoin being used on interesting stuff. I completed my Infinity Gauntlet almost of the Galaxy Research Squad with Alex, but as you guys put out more research, I will tap you to come on and talk about it. One of my favorite ops out there in the Bitcoin space. Alex, thank you so much for coming on the pod, and I will see you in person at a conference again someday soon.
Absolutely. Thank you so much, Charlie.